And with this, we move on to our next session, which is the fourth session of the day. And this session is on panel discussion on how and when to scale your venture. Now, scaling up can be a make or break moment for your company. If you scale your business too quickly or recklessly, and you will create a host of organizational problems that will be hard to undo. Premature scaling may even cause your business to fail, and if your speed of scaling is slow, you will miss out on the key opportunities that will come with greater resources and revenue. So what is the right time to scale up your business? More importantly, how should one go about scaling the business? Our next Power Pack panel is here to answer all those questions and concerns lingering on in your mind as you go on about strategizing the growth of your business. In this panel, we are joined by Mr. Samir Ojha, Partner, Investment Banking and Advisory at EY. Samir will also moderate this session. EO at Policybazaar. Good to see you here, Sarbvir, and welcome to the session.
Thanks. Nice to be here.
Thank you. And rounding off this Power Pack panel is Sheetal Lalwani, COO at JusPay Technologies. Welcome to the session.
Thank you.
I will hand over this session to our moderator, Mr. Samir Ojha. Over to you, Samir.
Thank you. Thanks a lot. Good afternoon and welcome, everyone. As we think about the business thesis of any enterprise, a key question around that is the question of scaling up. Can this scale up? Will this scale up? How can this scale up? And what are the complexities around that? That's often also the most complex challenge that any entrepreneur encounters in their business journey. Over the next 40 minutes or so, me and our panel of 3 experts who have done it in the past, we hope to have a insightful discussion, trying to get to the what, when, and how of the scale up challenge. So let me just open it up with you, Sarbvir.
Sure.
In your career, you have seen it from an investor's perspective, and you
Sure.
also seen it from an operating perspective as you took charge and grew businesses. When you think of the when and what of scale up, how important are the internal factors? And what I mean by that is, the product readiness, the team, and how important are the external factors, like the competition, the market environment, and things like that.
So yeah, Samir, I think there are 2 ways of looking at this question. See, the theoretical answer, as we all know, is that you should have your unit economics right, and then you expand, when the unit economics are right, and things like that. But practically in the real world, there are two factors. The external world is not in your control. So, there are moments when investors are more keen to invest in certain businesses, and there are moments when investors are less keen, right? Now, what you can control to a bit more extent is that you can control your internal dynamics in terms of your ability, your readiness, and, things like that. So what I've seen in my career over the last 15, 20 years is that finally there are 2 factors. One is that when the external environment is positive, I think you have to act at that point, because trying to be too cute, trying to be holier than thou, that I will only take money when I need it, etc., is a very dangerous statement, especially in the Indian context where perception and flavor of the month can change very quickly. So I think when that moment is there and you are in a position to be able to lay out your vision, and when investors are buying your vision, I believe that is a time when you should raise capital to the extent that you can. The second thing, of course, is that look, it's a balance. You must have the internal capabilities and the readiness to scale the business, and the answer very much is very personal, because if I give you an example, what happens is that some entrepreneurs I have seen are very capable of being able to sell the dream and then figure out the dream, right? So one model is that you, as they say, you fake it and then you make it, right? And some entrepreneurs are not as capable. They are not comfortable in doing it that way. They feel far more that they want to get their internal house in order. They want to get their reference customers, the unit economics, and things like that. So what I always suggest is that first understand your personality, understand what is working for you and what is not working for you, and then you have to act accordingly. the people who get into trouble actually are the people who act, aping somebody else, who feel that because the rest of the world is like this, I should also do that. And, then they tend to get caught in it. But people who are on both sides, I have seen succeed. People who did not have a business and were, raised capital and then, slowly and steadily sort of managed to grow into a business. I don't, in India, I know it's very hard to say the winners and losers, because the reality is that very few companies, few of us actually make, consistent profits. So till we make consistent profits, I think, it's hard to say what's going to happen. But clearly, you can, based on valuation, etc., you can say that they have done well. And many people who have not done well are people who have tried to fake it and then, not able to do it. There is no shame. I feel in entrepreneurship, there's no shame in taking a path which is, applicable to you, and to saying, okay, fine, I'm going to take it in this particular way. I'll go slow and then build it. I've seen Policybazaar is an excellent example. It was actually profitable, in the first 10 years of its existence. Because Yashish felt that, that was the only way to do it. And, he was not as keen to raise, too much capital, etc. But then, once they did raise capital from Tiger and then SoftBank, we've actually gone the other way, and, we've been investing a lot more money in acquisition and stuff like that. So I think there's no perfect answer. I would just say, know yourself and go by what, you believe is the right way to do it.
Very interesting. I think to your point on timing matters, Sheetal, let me come to you. You set up and built JusPay just in the right time, right? When India was taking off in terms of digital payments, NPCI came about, UPI was becoming big. And especially as you look at a B2B business and a digital only business, is scale up really an option, or is it more of an imperative in the sense that you need to be ready, when things explode?
Yes, Samir. I think I just wanted to again emphasize some of the things which Sarbvir said. Right, very very relevant. In a few minutes, he hit the right point in terms of it's a balance. You have to balance everything out. You can't. Cute is a good word to use. You can't say that I won't take capital and I'll do it my way, because ecosystem chooses winners. You get anointed, and then after that, sometimes even you might have the right product, but you may not have the market. Right, for us. So when it comes to digital, it is you have to be cognizant of the fact that it is possible to scale up fast. That's what digital allows you to do. And we all know the curves of, how fast markets change, because once digital comes, we've all heard about software eating the world, right? So you have to be extremely cognizant of that fact. And to that extent, you have to stay relevant in this business. And you're constantly looking for that incisive market entry for a product, right? So it is sort of imperative, given that you are digital, things will change very fast. But at the same time, you need to balance the fact that you need to go there with a proper fit. So you are constantly looking for that incisive entry. And once you've done that, your land and expand kind of strategy, right? Once you have that, you need to be ready. And that's when all these things start coming into play. You now have an incisive market entry. You have gained relevance. How do you now grow? How do you scale up, right? That's when the people, the culture, the tech, all of that comes. So to answer your question, it's absolutely important. I think you can't stay back, because in 3-5 years, we've seen UPI completely disrupt, a lot of business models. So you need to be aware. And so we have an anchor. See, every company has a strong anchor, right? Our anchor was frictionless experience in payments. And when we saw the UPI spec, we felt it was right. And hence we gave it all in with all our resources. When we got the opportunity to build Beam, we stopped all our business and we said, let's just build it. We'll figure out, how the monetization comes, because it was the right thing to do. And that feeling of doing the right thing comes when you have strong anchors, right? So it is imperative. You need to have an anchor, is what I would say.
Interesting thoughts. Imperative. Anchor is very, very important. And when you see that big opportunity, drop everything else and you can go all after it. Gaurav, let me come to you. I think you when you started Capital Float, you were in the NBFC world. You were actually challenging the whole notion of how scale is built, right? Traditionally, we saw lenders define scale in terms of branches, right? I'll go to one market after another, and that's how I can, in a way, control my funnel and how much I can grow. When you started in a digital world, you practically you throw up your funnel to anywhere, any person across the constraint of geography. But at the same time, being a regulated business, you are constrained by the risk management frameworks and the regulatory capital limit that regulator places on you. How in such an environment, how do you think about the scale up question?
No, that's very good context because the lending business, as you know, is a bit different from the payments business or a lot of the other tech businesses where you can actually just press the accelerator and what you end up losing or winning is a good CAC. The lending business, however, if you scale up too quickly, you won't realize till 2 or 3 years later what you've lost, right? So you may lose CAC, you may lose entire capital, you may lose your entire shirt at times, right? So unfortunately, the lending business scaling up too quickly definitely has its challenges, and to be fair, we have seen some of those challenges. But so I would say in our type of business, even though you've not got the unit economics right, like Sarbvir said, you need to know whether your credit model is working, right? And that's one piece of the unit economics. And if that is working and you've seen it over a couple of years, then you can say, okay, now I can go forward and scale. And when you scale also, you cannot go from X to 100X in lending. You can go from X to maybe 1.5 or 2X and kind of wait that out till you kind of see the next cycle. And again, fortunately, unfortunately, in India, we've had demon, GST, ILFS, NBFC crisis, now COVID. So it's been about living crisis to crisis, and in crisis, underwriting models don't really hold very much. So I think my answer to how we scale here is not so much regulatory constraints. It is the availability of debt capital and equity capital and that kind of combination that you have. And if that's available, yes, you can press the accelerator. But more importantly, once you have confidence of where your credit elbows lie and what your collection efficiencies will look like, even though your overall unit economics are not kind of visible yet, I think that's when you can go confidently and say that, okay, now I know how to scale a lending business. And so for us, the first 2 years, 2 to 3 years were very, very slow. The next 2 years were very fast. And the last 2 years have been slow again because of a lot of these crises. So it's been an interesting kind of journey of up and down.
No, interesting. So the external factor in some businesses can end up impacting how you think about growth and scale up much more, than some other businesses. But especially as you look at, what's transpired with some of the largest banks in this country over the last 2 weeks, in particular, and a few months before that. Sarbvir, would be interesting to get your views here, right? You run a platform which many like me may argue is already scaled up, right? But does the scale up journey ever end, or is it a constant treadmill?
Yeah, Samir, I think we would definitely not agree that we are already scaled up. I think we are a drop in the ocean. The insurance business in India is massive. The fresh premium in India is over 100,000 crores a year, and we are probably doing about 4,000-5,000 crores. So I think there is a significant opportunity, that lies ahead of us. And I think I would say that different times, require different strategies and different levels of difficulty. Because as they always say, going from 0 to 10 is really hard. And then, going from 10 to 100 is harder. And then sometimes, maybe going from 100 to 500 may not be as hard, right? Because now the company has resources, you have management, you have teams, you are able to do things in a little bit more organized way. But then, you reach a point like to some extent where we are today, where, growing from this scale means that we have to add significant absolute amount of business every year. And that is is hard to do, right? Because as we don't have too many markets in India where things are growing 50-100% year on year. So the markets grow at certain rates, and it's, as you try to gain share in that, there are certain ceilings that you come across. So one of the challenges that we are right now foreseeing is that, like, if you want to add a few thousand crores of premium every year, what is the right way to do that? And one of the answers that at least we have found that works for us is that you have to break up the problem into smaller pieces. Because you cannot, look at it as a monolith and say, okay, now, what do I do? You have to break up the problem into smaller pieces. And the second thing is that you have to plant trees. And what I mean by that is that you have to take a view that a business which may only generate 10, 15, 20 crores this year or next year even is something that I have to worth doing, because I can see a path to generate, 500,000, 2,000 crores in that business 3-4 years from now. And that is, I think, the challenge of senior management, where it is sometimes too easy to get into sort of this management approach, right? Where you just start managing what is happening and doing review meetings and all those kind of things. And you forget to plant the trees and nurture those trees, because otherwise those trees get lost, right? I mean, nobody cares about a 10 crore business when, businesses are doing 10, 15 times that. So I think that is where I think the founders and I think the senior managers have to step in and understand that, like I said, the job is not to just, conduct reviews and things like that, but is to really focus on business development and creativity, right? Where you create something rather than just, send PPTs to each other by mail. So I think that is the critical thing, and you can fall into that trap, trust me, because what happens is that when business starts to get, reach certain scale, it's very easy to feel very good about yourself. And, for Policybazaar, you could say, okay, we have, 80-90% market share in digital insurance. We are in great shape. But unfortunately, I think that would be the beginning of the end. So I think you have to take a very clear approach as to what are your goals, where you are at. And I think, like I said, manage what you have and also keep planting new trees. Because until you plant those trees, you'll suddenly run out of runway very quickly.
No, very interesting. The process never ends. And Sheetal, it will be good to get your perspective also here, because you were bang in the middle of something which exploded, right? In terms of, the whole digital payments ecosystem, where we are realizing some of the legacy systems of the banks are now struggling to keep pace, right? What was your experience as you grew through all that?
Samir, so growing through this dynamic thing in payments, right? India has been at the forefront of all sorts of innovation in payments. That way, absolutely a place where so many things are happening at the same time, right? There's regulatory changes, and then there's also the ecosystem changes which come in. Again, going back to what we said, for us, so that we don't lose sight of the value which we are trying to create in the ecosystem, the anchor of having a frictionless experience gave us an anchor, but it allowed us to also expand in things which would otherwise seem tangential at some point, right? The UK story is like that. For an outsider, it would look like, why would a B2B company like us go and build something like Beam for NPCI, or why would we do something like a hack, right? We started off with doing OTP reading like 6 years back. And at that time, it seemed like a hack. Banks wouldn't like it and all of that, right? But when you have an anchor, you can sort of align all of those things into a philosophy internally. And that helps the broader company to take these calls about saying, is this the right thing to get in? Are we doing the right thing? And like those planting those trees, right? Unless you send a lot of those ships out, if you don't sail a lot of those ships out, some of them are not going to come back with that treasure kind of thing, right? So we have to place those bets, but with that anchor. And so we did that. Working with banks is very clear, right? As long as you're in payments, right, you have to work with banks because they bring a lot of value to that table. And hence, taking an ecosystem view of working with multiple aggregators, working with networks, working with banks has always been another anchor for us to know that who are the guys we have to play with. And then we start putting on those bets. But again, as a startup, you don't have all those resources. You can do a lot of those things. So how do you make those trade-offs? And when you're small, which are the bets you take? And then as you grow, what are the side bets which you take? Right. So that has been our thought process, Samir, about how do we keep expanding without losing, the focus.
No, that's very interesting. And let me, at this point, shift gears and get to the more complex end of the problem in terms of how you execute it and how to go about the scale up. And Sarbvir made a probably very pertinent point at the beginning that raise capital as when the market is buying your vision, and raise capital when the market conditions are right. Let me ask you, Gaurav, while that's a very pertinent point, and capital is probably becoming core to to your ability to scale up. But at the same time, as an entrepreneur, one way to think about it could be you are effectively trading your equity for growth, right? Because the longer you wait, the less you get diluted. How, as a founder, how do you think about that?
Yeah, see, I think fundamentally, in my view, there are two ways to run a business, right, in India. One is, and I'll take an example of a similar company in our space. To take the example of, let's say, a Bajaj Finance, they've built a great institution, done it over, let's say, 25 years or so, where the founders and the senior CEO, etc., hold a good amount of equity stake even after 25 years. Now, the only way in my mind to compete with them is not taking 25 years, right? You have to do it in 10 years. And if you have to do it in 10 years or even come close to what they are in 10 years, the only way is to raise capital and raise growth capital and equity capital from VCs, PEs, or whoever else is offering it. That does mean that obviously it's going to come at your dilution. And I think most startup founders in India, especially after a certain stage of, let's say, a Series B, C, are typically, single digit equity owner or maybe sub 20%, depending upon if you're in a hot sector or not. But I think that is something Startup India has kind of, in some ways, gotten used to. That if you pick the VC and growth capital route, you are going to get diluted and you are kind of stuck on that path. Or you pick the route, like I said, let's say a bootstrap route where, let's say, a company like Zerodha also has done that, right? And they own almost high equity. And that's another route that you take, right? But I don't think you can go back and forth choosing one over the other. Let's say I've raised my first round, second round of funding. Then I say, hey, I'll sit back for 5 years and conserve my equity. I'm not sure that actually works. Once you're in the race, you're in the race to either win it or lose it.
Yeah, no, interesting perspective. Sheetal, I think as part of the founding team, I'm sure you also would have gone through similar conundrum, right, in terms of bootstrapping versus trading off equity for growth. How was your thought process at that time?
Yeah, Samir. See, we were always from the beginning. We knew we'll have to raise capital because we were getting into payments, and payments is a razor. It's not even a razor thin margin. There's no margin now with zero India. But we knew we were getting into a business where we'll need to raise capital. For us, the thought process was about raising the right kind of capital, right? Because we are a little bit of we would say a little bit contrarian in the way we do things internally. So we take our own time, and hence it was good for us to take capital, which will let us do some of these things, right? And see, you wouldn't call us as the guys who really scale up. We've raised less than 30 million in these 8 years, and the bulk came just 6 months back, and it's sitting in the bank now, right? But we do realize totally with what Sarbvir and Gaurav said, right? Once you're in the race, you can't ignore it. That would be cute, and that will come to bite you. So we understand the need for raising the right amount of capital, with capital itself not being the core focus, but it is required because you are in a game and you have players who are raising lots of capital, and you don't want to be the guy who is now facing that nuclear arsenal, right? You need to have some of your own capital also. It is money and also your market share, but raising the right amount of capital. See, sometimes the answer comes from the market. We were 3 years back, we were not looking to raise capital. And then we had this moment saying, maybe it is time. And then we did our, we might go back to the market sometime soon also, if we find the right opportunity to expand, to invest, and if it is also needed. So yeah, the answer comes from outside also about whether you should be raising capital or not.
No, interesting perspective. Sarbvir, it would be good to get your thoughts as well. So like Gaurav and Sheetal both mentioned, it's kind of a strategic choice where at some point you need to figure out what path you want to take. But if we look around, very few have taken the path to bootstrapping, the organization, and it may be more to do with the signals that the market is giving to you in a way, like Sheetal mentioned. So is bootstrapping really a choice, and how big a moat is capital?
So I think, Samir, I'd like to make one or 2 points. I think both Gaurav and Sheetal have covered the issues quite well, but just make 1 or 2 points. See, one is that, as they say, right, jo dikhta hai wo bikta hai, right? So there is a tendency to, we see people who have raised a lot of capital because they are the ones who get press and who are on TV, etc., and are written about. So we tend to feel that's the only way to do it, right? Ever so often you will be surprised, and you'll find there are companies which have built reasonably large businesses, like let's say Zerodha, or even let's say Bajaj Finance, which I mean, it's difficult to compare because they started with a certain heritage, but still the finance business has been built out pretty much from scratch. So I think there are examples, but they tend to not get as well discussed as the other capital raising guys. I think the second point, which is maybe slightly counter to this point, is that digital businesses tend to be slightly winner take all type of businesses. One is the fact is that when you look at the West, and in China also to some extent, which is what we all look up to, right? The truth of the matter is that we all are to some extent taking a playbook which is happened somewhere else, and so are the investors, right? Now, when we look at that playbook, what one finds is that the people who have won tend to be the ones, who are, way out there, right? And they tend to get all the spoils. So there is an element of saying that at this point, I cannot worry about dilution. I think what Gaurav said, that you cannot wait for 25 years. I can't do all those things. I am trying to be that winner. And if I'm trying to be that winner, then dilution, etc., is irrelevant. I just have to, get as much capital as I need. So now, you can argue this point, and I'm sure different people will look at it differently, but I do think that in digital businesses, this is a fact of life. So you cannot ignore it, and you have to sort of take that into account, which would then suggest that dilution, is not really something that you should bother about too much. And my bias, on this subject, having seen a variety of, companies grow and, succeed, and in some cases not do well, is that finally, I think, once you're playing the game, and I think Gaurav said it best, that once you're playing the game, then play the game fully. Don't hesitate. Don't say that, okay, now, I've reached this point. Now let me protect my equity or whatever the story is. I think you should then go ahead, do what you need to do. A small piece of a very large cake is worth a lot more than having a very large piece of a very small cake, right? But like I said, I would not necessarily discount the fact that there is a way to bootstrap, but it's hard and it's really difficult to do. But the other path is hard too, Samir. It's not like, what we have here are the winners, right? People like Gaurav have done extremely well, or Sheetal, these guys have been able to sell the vision and raise capital. This is not normal, right? There are a whole bunch of other people who set up these type of businesses and didn't get till where they've got to. So I don't think we can, nothing is easy. I mean, I think that's something that I would definitely say.
No, very important point, Sarbvir. I completely agree with you. I think capital becomes the key, but yeah, I think both paths are not easy, and end of the day, it boils down to how well you execute and deliver on your business. And the key element of that, is the whole customer experience, right? And that's the question we often face. As you deal, with as and when the founder is doing everything, you have complete control. The customer experience is great, but as you are scaling up in a way, the customer experience is at a risk of being compromised. So as you grow, your business, and probably let me stay with you, Sarbvir, here for your thoughts. How do you ensure that the customer experience stays consistent and you don't compromise it?
Yeah, Samir, I would not necessarily link it necessarily to the founder. I think what happens is that the business grows in a certain way, right? And sometimes that growth is linked to customer experience, and sometimes it's not. Because what I've also found in India is that value trumps customer experience. So let me give an example. Like if I was, let's say, okay, let me take an example from our own business. That if I'm able to offer a product at a better price, right, or a better proposition, then that sometimes can trump whether or not my customer experience is the smoothest or not, right? So I think it's also very important to understand that in your business, what really matters, right? And it's not always, India is not a market. The US is a market where perhaps, customer experience is utmost, and then everything else follows. China, if you see, is a bit like us. Their customer experience is not in the Western way very, is as great. So I think in India, you have to be really careful. You can sometimes go wrong if you just keep aping something else mindlessly and focusing too much on customer experience, because then you find that a very small sliver of India, a very small percentage of Indians really care about that. And most importantly, are willing to pay for it. See, all of us would like the world's best customer experience, but are we willing to pay for it or not? So a successful business is where you are able to find the, intersection between what people are willing to pay and, then buy. Otherwise, there is really nothing much to talk about. So I actually feel that it's not about just what, like you said, I would broaden your question beyond customer experience and say that I think what is the point that is resonating with your customers, and you need to keep developing it. And oftentimes, it's a journey that, the person who's running the business must keep an eye on that, because many times the trade-offs in normal course may be against it. So it's easier to grow if I'm, not doing such a great job with customers, but in the long run, it's not going to work. So I think you have to keep managing that. And I think whether it's a founder or it's somebody else, I think you have to keep looking at that and managing it. Because the problem with it is that if it goes bad, it's not easy to get it back. See, once customers feel that a perception of a product is poor, changing that is really hard, especially, in the Indian context.
No, exactly. Very important point you made there. And Gaurav, in a lending business, right? While it's easy to make the customer happy, give them loans at cheap prices, which don't ask them to give it back, right? Your challenge, as you grow, would be something else, right? In terms of how do you ensure that as the organization is growing, you ensure that the credit quality and the delivery quality is consistent. What was your experience there, and what do you think matters, especially in a lending context?
Yeah, I'll tell you from personal experiences, right? As we started to scale up the business 3-4 years ago, I think we did not have a centralized risk function. It was broken up into different product verticals. And so while each product vertical obviously was managing to within their risk, I think at the overall, there was not a single person that was kind of, apart from the founders, who was kind of responsible for driving a certain risk number or a collections number. And I think that was a very interesting learning in terms of how do you, especially if you're doing multi-products in the lending business, what is the kind of right organization structure you need, whether there's some level of matrix organizations, what are the checks and balances that you need from, a sales and product vis-a-vis risk and collections. Now, I know this sounds a lot theoretical, but when you're actually in the weeds and you've seen, a couple of cycles and NPAs come and go, you start to realize how organizational structure is very critical to a business, and especially a lending business like us, where you're able to develop the right checks and balances. So that was one of the biggest kind of learnings for us in terms of how do you ensure, as you scale the organization, you are able to put the right processes in place. I think the second thing is, it's just about culture at the end of the day. Again, sounds theoretical and like anything that anyone else would say, but at the end of it, the lending organization, as much as we do tech and we are kind of tech enabled and provide a great experience to the customer, I think our DNA is risk and collections. And so whenever we get asked, how come some of the large payment companies are not going to come and eat your business and do collections and do loans? And my answer is always in DNA, right? You have to have the DNA of a risk and collections org to be able to scale a lending business. And if you can do a multi-product or multi-business company and still develop that, kudos to you. But I'm of the firm believer that if you're running 5 different businesses and if you don't have the DNA of lending and risk, I think it's a very hard business to scale.
Interesting point. Do it right. But as you as you grow, and especially more from a geographical and market dispersion perspective, right? How do you keep your ear to the ground and ensure that you are solving the problems which are real problems, and how the customer problems are changing? How do you do that and does it become more difficult as you as you grow larger and scale up?
Yeah, I mean, the truth is it does, right? And I think the only way we've at least tried to do that is by always spending a lot of time on the ground. So both Shashank and I, obviously pre-COVID, used to travel a lot, meet customers, meet our collection agencies, meet our partners who we work with. And I think we've hopefully tried to instill some of that in the next couple of levels within the org. And that's the only way to kind of really figure out what's happening on the ground. And so you have to, if you want to keep your ear to the ground, you need to be present there, no matter how digitized your business is. And you have to be able to develop this right balance between, the tech that you deploy, the customer experience that you deploy, vis-a-vis actually sitting in front of a customer and understanding what his or her needs are.
Interesting. Sheetal, your perspective, especially around the aspect of culture, which Gaurav very rightly mentioned at the core of it, and also as you think of the tech architecture, right? So in your business, probably tech matters much more than anything else. And as you design that as a young organization, how do you take care that it is actually scalable, right, and doesn't become obsolete very soon?
Yeah. So without belaboring too much into the actual tech about how we build scalable tech, I think a couple of thumb rules, or I would say a couple of guiding philosophies which we have for tech, and I think it was also touched upon earlier, is avoid premature optimization is one of the things, right? In tech, you're always solving a dual, which is about reliability and then scalability, right? In a way, you can scale up, but how do you also keep the reliability? And ours is like you pointed out, it's an infrastructure play. So we took a few calls early on, which allowed us to focus on building out the actual product and functionality. And we just went on cloud from day one so that we don't have to worry about, yes, the cost was a little prohibitive, but I think in the long run, that was the right thing to do because we didn't go in and optimize cost too much for cloud. And now as we really scale up, even now in a way for us, it's about reliability, and we become the single point of orchestrating payments for a lot of large companies. So we, say for example, top level calls like having redundancy, like can you have multiple data centers active, right? You have some of these guiding philosophies as your thumb rules for designing tech, redundancy, failover, automatic, while balancing out your conflicting things about optimization of costs of infrastructure and all of that, right? You balance these out, and that's the way you play it out when you're dealing with for our merchants. It's all about infrastructure at the moment, right? So many payment options and the incoming scale. How do you manage the infrastructure, right? So we deal with this dual with some of these things about avoid premature optimization, having top level calls. And that's how we try to, give the experience which we need to give to our merchants.
Interesting. I think as we get in towards the last 5 minutes of our time, let me throw one very important question to all three of you, right? As you go through this journey, inevitably there will be missteps, right? And there will be missteps, but how do you ensure that the missteps don't break your stride and you stay on course? Any examples or learnings?
Samir, all I can say on missteps is that, like you said, there will be missteps. I think if you're lucky, you can recognize them fast enough and, change course. To my mind, that's really the most critical issue. I don't think maybe others have a solution to this. I don't think any of us would probably have a solution to avoiding the missteps altogether, because otherwise we wouldn't take them. The challenge is you don't know what's going to happen. And I think the key thing I found is, your ability to recover. I think everything else will happen, and, it's okay. I mean, you see these large companies, I was once reading the history of Google, and there was a period in between when apparently, they were doing, all kinds of stuff, right? And I don't want to sort of get into it. But what I realized was that the idea itself was so powerful that it went through all that, right? So there was a year or two where it did other things, but it didn't work out, didn't matter. So I think that's really the big thing, that you need to have a big, mission, vision, whatever you're trying to solve a big enough problem. And then the inevitable missteps will happen, and hopefully you'll recognize them. But I don't think there's a formula to avoid.
No, you're very right, and that I think it's very important to be able to recognize, where things did not go to plan. And Gaurav, I think you've been pretty open about admitting, when things did not go to plan at Capital Float, right? What was that decision like, and what did you do to correct?
Yeah, I think one of the biggest learnings was don't repeat the same mistake again. Uh, and we have also done that, right? We made it twice, but we made sure we didn't make it the third time. So I think if you can make sure that the mistakes you made, to Sabir's point, you have to recover fast, right? If you try to kind of keep thinking about it for months together and say, how did I do that? I think you're never going to kind of recover and survive. I think yes, mistakes happen, put them in the past, move on, and make sure when the next round comes, you don't do the same thing again.
Very, very, very interesting. Sheetal, anything you like
Yeah.
that?
Yeah, we call it creating buffers. You need to have buffers. You need to create cushions, and then you take some of those leaps. Don't be in a fantasy land. Is what it's important to know, right? You need to know where your buffers, cushions are. You take those leaps. It's chaos and order. You have to balance both, and then you will make missteps. You should make missteps, and you need to be cognizant of where you're making them course correct soon. Easier said than done.
Yeah.
But you live through it, you grow a few white hair, and you live another day to, make another mistake. You have that cushion.
No, yeah, interesting. Yeah, never be scared to make mistakes, but always recognize mistakes and be brave enough to correct them. And that's what we learned from all the successful businesses. Probably I have 2 more minutes, so let me just ask each of you very very quickly. As you think of the business environment, in general, what will be the one thing that you would like to change, be it in the environment, be it in the regulation or otherwise, that would enable faster scale up, or that will make the scale up journeys easier for enterprises?
Sure, I can take that. I think at a fundamental level, it is still not easy to do business in India, right? Yes, we've kind of risen ranks on ease of doing business and things like that. But especially the business that we all are in, all three of us here on this call are in regulated businesses. Even outside of regulated businesses is hard. But when you're in a regulated business, and we do understand and appreciate the need for regulation, but I think the way regulation is today in India, I think while steps have been made to improve, I think we still got a long way to catch up to some of our peers in the West in terms of how you need to run a financial services business. What are the checks and balances? How do you kind of find this trade-off between under regulation and over regulation? And I think that's an area that I'm confident will evolve in India over the next few years. It's a question at what pace will it evolve?
Interesting. Sir, with your perspective, probably we have 1 more minute.
I think as Gaurav has said, we all understand the need for regulation, and it is there. I think sometimes what one would just wish is that we adopt a principles-based approach. I think sometimes we adopt a very detail-oriented approach around focusing on very small events kind of thing versus principles. And I think ideally, and we all understand it's a journey, and I think we are making progress on that journey. But I think if we can move to more principles and allow people to do things that are allowed within that sandbox or within that box, I think is a better way rather than trying to say, okay, you can go from here to there only in this particular way. I think that sometimes can be a challenge, I would say.
Interesting. Sheetal, 30 seconds. You have the last one.
Yeah. It's an easy thing for us, right? Regulation's still okay. I think ask any payments company and you'll hear, the MDR stuff is probably one of the things which should get solved. We're all for very, very cheap payments because payments should effectively be very cheap, but something sustainable. Yeah, it's, zero is not sustainable. Yeah.
No, thanks a lot. I think we're completely out of time. So before we end, again, it was a very interesting decision, and hope the audience also found it worthwhile and interesting. Thanks a lot again, Sarbvir, Gaurav, Sheetal. I'll hand it over to the moderators.
very much to all of panelists on this session. This indeed was a very good conversation and very interesting at that as well. Once again, a huge thank you to all of the panelists for making time for this conversation.